The short-term trading account is what I first started off with. When I had $10,000, when I first started, that's all I had, short-term trading account, because there's no point trying to get 10, 15% a year on $10,000. You're not going to go very far. Okay. The whole idea is to get that account to $100,000 as quick as possible, whether it's through trading, over time, selling things you don't need, stuff like that, building up the account, because the bigger the account is, the easier it is to compound that account. Okay. Me personally, now I have each 4 of these, but the goal is to get them all into this long-term account. Okay. So profits from the short-term trading account go into the swing account. Profits from the swing account go into the position account. Profits from position account go into the long-term account. Okay. And it's all around there. And this is the kind of set and forget stuff. But as we know, studying hundreds of years of data, there are many periods there where you can have decades of dead money. What you need to realize is, what are you doing? Are you short-term trading? Are you swing trading? So short-term trading is you're not really holding stuff for more than weeks. Okay, so days to weeks. You typically don't hold it for months. Okay, so that's in and out, in and out. And that's what I was talking about. You look at that weekly outlook, you go, what's hot this week? Boom, I'm making money there. And then I rotate out what's hot the next week. And you're literally just doing that. The swing trading is different. That's where, again, depending on time zone that you're trying to do, because it depends on your work. If you've got more time in front of a screen, you can swing trade the daily. If you don't, and you're pretty flat chart, then that's where you might swing trade the weekly. Okay, so these ones here is where you're typically trying to make money over weeks to months. Okay, so you're not looking to close that trade for in less than a month, but you're not looking to hold it for years either. Okay. Position account is where you're looking to enter a position, you're looking to hold it for years. Okay. That is where you're looking to hold it for, at least a year, likely multiple years. Okay. The long term is where you're looking to hold things for forever or over a decade. Okay, so there's different buckets that have different purposes. So you need to make sure that you are looking at the candlesticks that suit what it is that you're trying to do. Because if you look at it, and what we know from our phases is, I can see that's the accumulation phase. Okay, that's the tech bubble pop. I can see it came down, popped. We had the first move up, wave 1. We had the deep wave 2. We've then had that next move up. Again, you see how that's the first point where we've had a pivot. There's been no 3 candles until then. So that's that's my accumulation, that's my public, and now we're in the excess. Those that have done the Elliott wave course, etc., will know that what we also get is divergence from the top of the third to these fifth, etc. And you can see that in the charts. Okay, you can see we've got divergence from there to there, which is the top of that's the third of the public. So within the public, you got accumulation, public, excess to there. And now we're even getting it again. Okay, so you can see that was our point of extreme there. And everything that's been going on now has been going up on divergence. We've had a bearish cross on the 3 monthly that you can see. Okay, so it's kind of like it's at a level where, depending on your time zone, long term, from 09 until now, which is a long time, 16 years. So this is what you look at in the long-term account or position account. You're up in that level where you're looking to take profit. Okay. You've got to remember, there are people that bought NASDAQ and went long, like people down at these kind of levels. Okay. And they've just been riding that bull market, and they've been riding it for decades and decades and decades and decades. So what we want to do is we want to see, well, what are the things that are in this level now? What are the things that are in the accumulation, or the things that are in this? Okay. And for something like the NASDAQ, yeah, it does worry me in the long term. But when you start looking at some of the other things that we've talked about, let's say something like energy sector, is that one that is in the excess phase? Okay. Or is that one that has been in a massive, massive correction for the last decades and decades that eventually will come out and move in? So accumulation, that deep wave pullback, like I just showed you with the NASDAQ, And are we entering the public? That's where we're looking. If it gets above there, then boom, look at that. You can all those buys that have been sellers, if they disappear, boom, you've entered it. And then again, like people were shook out on energy because of that black candle right there. Because what they're looking at is this daily candle. Okay, they're looking at this daily candle, and what they're watching is, oh, I entered down here, I'm sitting on 40% profits, and now I've given back 20% of those profits, given back half the profits. And that can be very hard for your psychology because you're saying, I'm going to hold it long term, but then you're doubting yourself and go, oh, but. Okay. And that's why it's really important. You got to zoom out and go, well, where do I believe we are, so that you don't get kind of shaken out. It's exactly what silver did back when it was during its accumulation. Same thing, 2015. So I'll go monthly, you better see it a bit better. Okay, so you had that bear market and then that same thing. So that buying, you had that liquidity bottom. So again, look, silver was in accumulation from 2014 to 6 years of accumulation. Then it shot up, then it went into more accumulation for another 4 years. That together is 10 years of accumulation. Okay, so you're towards the end of that accumulation, and then you get the push up. Okay, and again, even looking at silver, is that the top of a whole cycle? There's no way that's the top of a whole cycle. Like it can't be. Like that's your first move, that's your pullback. This is all just one wave right here. Okay, so all it's doing, we know that's how markets move. We know they come down to a zag zone. Like this is normal and expected. That should not have gone to 120 that quickly. Okay, so when you zoom out and you go, okay, well, I'm long term, yeah, well, I'm completely fine. It's just having one of them. It's having a pullback, a healthy pullback. But again, that's brutal. Look, 2006 until that's 4 years it actually took to actually kind of get back up again. That's 4 years of mucking around. Okay, so you've just got to realize what it is that you're trying to do, trying to achieve. And only you know that, because only you know how much money you're dealing with. Only you know what your goals are, what you're working towards. Are you trying to leave your job? You're trying to buy a house. You're trying to buy a car. Everyone's got different things that they're trying to get on. But it's really important that you change this time frame to suit your goal and what it is that you're trying to do.